Hello, and welcome back to Explain the Charts. Today, September 15th, 2025, we're putting the tech giant Microsoft, ticker symbol Microsoft, under the microscope. Recent headlines paint a complex picture for Microsoft, with strong underlying business performance clashing with broader macroeconomic concerns. As of September 12th, Microsoft closed at $509.90, showing a daily gain of 1.77%, yet this comes after some significant volatility. Let's look at the daily chart to get a broad overview of MSFT's journey over the past year. Starting with the news, Yahoo Finance indicates that the overall stock market is performing exceptionally well, with the Dow Jones breaking 46,000 and Nasdaq hitting new record highs, reflecting a vibe expansion. This general bullish sentiment should be a tailwind for major tech players like Microsoft. On the bullish side for Microsoft specifically, MarketBeat and Traders Union highlight impressive growth in Microsoft's cloud and AI services. Fiscal year 2025 saw Microsoft cloud revenue soar to $46.7 billion, a 27% year-over-year increase, driven by robust AI integration and surging demand for Azure. The company also benefited from expanding Azure use cases in blockchain tokenization and a favorable EU antitrust outcome. However, there are significant headwinds. The Motley Fool reported that Microsoft stock was sinking on September 5th due to two key bearish catalysts. First, a much weaker than expected August U.S. jobs report signaled broad economic weakness, potentially prompting Fed rate cuts, but also sparking widespread stock sell-offs. Second, the Trump administration announced new tariffs on semiconductors manufactured outside the U.S., which could lead to higher costs for Microsoft given its reliance on chips from companies like NVIDIA and their manufacturing in TSMC's Taiwan facilities. The labor market also shows signs of weakness, with significant job revisions and stagnant pay raises expected for 2026, which could curb consumer spending on tech. We also note a Traders Union analysis suggesting Microsoft is expected to move sideways in the short term, despite a high probability of a price increase, highlighting dynamic resistance and support levels to watch. Now, let's correlate this news with the daily chart, focusing on the period from May 2025 to the present. Looking at this range, Microsoft has seen a substantial upward trend, climbing from the low $430s in May to a 52-week high of $555.45 on July 31st. This strong rally clearly reflects the excitement around its AI and cloud growth. However, we can identify a significant reversal pattern starting around that late July peak. The stock then experienced a sharp correction, dropping to around the $513 level by July 30th and further to $524 by August 1st, illustrating how rapidly sentiment can shift. After oscillating around the $520 to $530 range in early August, the stock then experienced another notable dip, reaching lows in the $500 to $505 range by the end of August. Then came the sharp decline on September 5th, precisely when the Motley Fool reported the bearish news about jobs and tariffs. The daily candle on September 5th shows a significant drop from an open around $509 to a close near $495, confirming the news impact. The previous day's close on September 4th was $507.97, and the opening of September 5th around $509, showing the market reacted to the news with strong selling pressure. From a technical perspective, the price had been trending upward from April's lows around $344.79, but found strong resistance near its 52-week high, indicating a potential longer-term reversal, or at least a period of consolidation after such a strong run. The area around $510 to $512, which includes the 50-day moving average and Ichimoku Kijun levels mentioned by Traders Union, has clearly acted as a significant resistance zone recently. Let's zoom into the 1-hour chart, specifically focusing on the September 5th price action to observe the hourly details of this significant drop. Here, we can clearly see the sharp decline unfolding from the afternoon of September 5th. The stock began the 1 p.m. Universal Time Coordinated Hour around $511.71, and by 2 p.m., it had plunged to $495.31, representing a rapid loss. This intense selling pressure, marked by large red candles and substantial volume, directly corresponds to the tariff news and weak jobs report. This confirms the immediate market reaction to those bearish catalysts, initiating a short-term bearish reversal. Volume increased considerably during this downturn, indicating strong conviction from sellers. The price found initial support around the $492 to $493 level, a crucial short-term psychological floor. Following the sharp decline, let's examine the immediate recovery and consolidation using the 1-hour chart up to September 8th. After hitting lows around $492.37 on September 5th, Microsoft began to claw back some losses, showing resilience. We see a bounce back towards the $498 to $500 range over the next few hours and into the following trading days. This recovery suggests that while the news created a knee-jerk reaction, underlying bullish sentiment for Microsoft's long-term prospects, particularly in AI and cloud, quickly came into play. The subsequent price action around $498 to $500 established a new short-term support zone, indicating that buyers were willing to step in at these levels. However, the upward momentum was not strong enough to immediately break above the prior resistance, leading to consolidation. This sideways movement is exactly what Traders Union predicted, suggesting a tug-of-war between bullish fundamentals and bearish macro news. Returning to the daily chart, let's observe MSFT's performance from September 8th through September 12th. After the low of $495 on September 5th, the stock demonstrated a clear recovery, closing higher on subsequent days. This strong rebound brought Microsoft back towards the significant $509 to $510 resistance level by September 12th. This daily action aligns with the bullish outlook from MarketBeat regarding cloud and AI growth, overriding the immediate bearish sentiment from the tariffs and jobs report. The candlestick for September 12th shows a strong green candle, indicating significant buying interest and a push towards breaking key resistance. The close at $509.90 sits directly at the Traders Union's identified MA50 resistance of $509.98, making this a critical price level. A successful breach of this level would confirm stronger short-term bullish momentum. For a more granular view of this recent push, let's switch to the 15-minute chart for the period of September 10th to 12th. We can observe a clear upward trajectory, with the price consolidating around $498 to $500 on September 10th and then breaking out. On September 11th, we see a strong bullish impulse in the later trading hours, pushing the price from the $501 range to well over $510. This move highlights aggressive buying activity, possibly anticipating positive news or driven by institutional flows. The $510 level proved to be a temporary resistance, leading to a slight pullback. On September 12th, the stock again tested and moved above the $508 to $509 range, demonstrating sustained buying pressure. The increased volume during these upward pushes suggests strong conviction among traders. The price fluctuations within these 15-minute candles also show intraday support and resistance levels being tested and broken. Traders looking for entry points might have used pullbacks to previous intraday resistance, now acting as support or confirmed breakouts from consolidation patterns. The strength of the move on September 11th, particularly in the evening hours UTC, indicates a clear shift in short-term sentiment towards bullishness. So, what are the key takeaways for Microsoft going forward? In the short term, the immediate resistance levels to watch are the MA50 at $509.98 and the Ichimoku Kijun at $512.57. A sustained breakout above $512.57 could signal a strong bullish continuation, potentially targeting the 52-week high of $555.45. Conversely, If Microsoft fails to break these resistances and drops, the critical short-term support is around $502.76, the lower end of Traders Union's predicted range. And then the September 5th low of $495. A break below $495 would be a bearish signal, potentially leading to a retest of the earlier support around $488 to $490. For the longer term, the $445.65 MA200 provides substantial support, but a move to that level would indicate a significant bearish reversal. Reasons to be bullish include Microsoft's continued dominance in AI and cloud, strong revenue growth, and an overall positive market sentiment. Reasons to be bearish are the macroeconomic concerns like the weak jobs report, potential impact of tariffs, and any hawkish shifts from the Federal Reserve. Unbiased predictions. There's a 60% likelihood Microsoft consolidates around current levels and then attempts a breakout above $512.57, driven by strong AI news and overall tech sector strength. Conditions reinforcing this include positive economic data releases, clarity on tariff exemptions, or a more dovish stance from the Fed. A 30% likelihood exists for continued sideways movement between $500 and $512 as market participants weigh competing catalysts. This would be reinforced by mixed economic signals and ongoing uncertainty regarding tariffs. Finally, there's a 10% likelihood of a significant drop below $495, perhaps triggered by further negative jobs reports, tariff escalation, or a broader market correction. Traders should monitor economic reports, Fed commentary, and any new developments on trade policy. For those looking to trade, consider entries on confirmed breakouts above resistance with strong volume or accumulation near key support levels, but always with defined stop losses. Remember to look for confirmations like increasing volume on upward moves and decreasing volume on pullbacks to reinforce bullish sentiment. Conversely, watch for high volume on downward moves or failure to hold key support levels as signs of bearish pressure. Thank you for joining Explain the Charts, and we'll see you in the next one.